Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, so a lot of analysts looking at alternative data have started to warn about an incoming flood of jobless claims. So here today, Thursday, the regular weekly jobless claims data ends up being a really important data point. Yesterday being quite a mess. If we come over to the charts, man, so yesterday in the treasuries, we had like the huge spike off the news, but then that all came off. So yesterday we got left on this like little spike. I actually held it through to the auction and was able to pull a little bit of a profit off of that. So only took a small loss yesterday. Here this morning, it looks like there's a little bit of pressure again, but if those jobless claims start surprising, then we could like really rock it out of here, right? So that's the main thing I'm going to be looking at. S&P 500, a little bit of a sell yesterday. Oil shoving higher, though, after that CPI news. Really interesting. Do I have the... Yes, okay, that's right. It is PPI and unemployment claims today. Okay, good. Gold and silver still kind of pressuring to the upside. Kappa looking pretty okay here. Bitcoin's still trucking along. Briefly dipping below 30,000, but I still think there could be some drama coming out on here. When it does this, there's usually something going on, right? And the dollar continuing to look weak, down below 101. Yeah, the dollar getting hammered. So that's where we're at here today. So if we see, so the jobless claims, we're looking for a reading of 235. If we were to get something more like 250, I think that could reverse many of these trends. But that's like a big if, right? A big if. But that's where we're at. All right, here we go. Jeez. Okay, so jobless claims was 239 versus 235. PPI. US PPI month over month, negative spot 5 versus 0. Jeez. And core PPI month over month, negative spot 1 versus a spot 2. Yeah. Very, very interesting. So we did not get much of a change in the initial jobless claims. I was a little bit higher than anticipated, but not the huge spike that some have been forewarning of. But the PPI negative. I am seeing a little bit of large orders moving around in the S&P here. The volume over here in the Treasury looks pretty furious, but they're just trading back and forth at 27. Already 10,000 contracts long as well. I am not 100% sure how to play this one. I mean, I think you go long, but could come back a little bit. I'm interested about I ain't getting information on like revisions and so forth. See, Zero Hedge's story is continuing claims data suggests recession may almost be upon us. So coming back here to my numbers. Continued jobless claims, it was 1.81 versus an expected 1.835. So that doesn't fit in with it either. So now we have to start thinking ahead to we got a 4-week bill auction and a 30-year bond auction today. And yesterday's 10-year auction was a little disorderly. Although I've found that when you have like a couple of them that are bad, and then they are all just going into the same tenure, and so the 30-year auction could be better, right? And this looks like it's retracing. See, the problem is I'm looking for something that would convince the Federal Reserve that they don't want to hike in May. And it doesn't seem like we're getting it. Doesn't seem like we're getting it. It is hurting the dollar, though. I mean, they're down 30 cents, but hitting the dollar here. Euro doing really well. Morning, Rob. And I should mention, glad, Walter, that you got here on time today. Good job. Wow, that bounced quickly. Yeah, I'm a little concerned that you get a flow similar. Hey, Steven, I haven't seen you in a few days. Actually, I think it's been a little longer than that, huh? Yeah, I'm a little concerned that we could get like flows similar to yesterday, which ended up being a very slow and steady sell with a lot of wobbling around, a very difficult trade. So if I wanted to go long treasuries, short rates here, I could do so at 3,405 perhaps. Oh, good. That's good. I'm just refreshing. Amazon CEO Jassy says Amazon Web Services hit by headwinds while emphasizing AI's transformative potential. Yeah, they're behind. They're behind. Google and Azure are way further up on the AI infrastructure side of things. There's going to be a spot gamma zero hedge webinar today in 3.5 hours. Well, I don't know about this one. So they moved up like what, 3 ticks here? I have not seen a meaningful change in cumulative delta in the dimes, at least. I do see a little bit of that increase in the 5-year. So this could be the area where they just drill a hole and sit. What else do we got? We have retail sales. So that's another one. Retail sales. If I come back in here and look at what the number is. Well, the expectation is to be negative spot 4 on retail sales. But yeah, I do think there's a possibility that it could be much worse. We've had recently as low as -1. In January, it was -1. And sure enough, they fall through there a little bit, and we're now at 3.41. What's this? U.S. Treasury 2-year, 10-year yield curve slightly reduces inversion after U.S. data. Yep, yes, I do see that. Slight steepener. On the knobs spread side of the spread, of the curve rather, not much movement. Okay, so here you go. Jeremy Schwartz. A few chart updates with our CPI calculations that include alternative shelter components. Officially, CPI headline inflation of 5%. Our calculations show less than 3%. Inflation was much higher in reality before, and it is now much lower. This is Jeremy Schwartz being retweeted by Jim Iorio. This is exactly what I was trying to point out yesterday. Nick Timmeros, the system came close to stopping, says Warren Buffett, who plugged my book that delivers a look inside the Powell Fed. Buffett, if you read a book called $1 Trillion Triage, you can get it on a day-by-day account. Well, this sure seems like the place. I don't know, man. I do not like that right here. You see this? Like, man, it is just, what the heck? I mean, it's wobbling around a little bit. I guess it could have gotten 4-1, but the volume is just totally flat. I find that a little bit disconcerting. Watch them turn on a huge bull bender and I'll miss out. What? Binance says ETH withdrawal requests may take up to 15 days or several weeks to be fully processed? How? What the heck? That's not okay. What the heck? The Pit Chicago is tweeting some guy named Elson Algren saying, loving Chicago is like loving a woman with a broken nose. It's awful. Man, maybe I should have gone for it. So I was looking at it. I was like, well, here's the spot to take it. And then I looked at that and I was like, nope, I don't like it. And so as soon as I started saying something, it was almost like, okay, Seth, we were going to throw you a bone today, but you didn't want to take it. So now we're going to move down. Okay. The S&P is unsure of which direction to take. Yeah, I mean, it seems to me like it's doing the same thing that the Treasury is doing, in that it doesn't really want to move. Now the Treasury is moving, though. So, like, I think I missed my opportunity, unfortunately. That one required a little bit too much of a leap of faith for me. So, and you know what, like, for them to come up here to 25 to 265, it's only came up 4 ticks there, and they moved like 15 ticks in the yields. That's also a little odd. So the yields are being very sensitive here. Well, it did look like there were some buyers there, but the sellers were able to take a tick down. So, and let's see here, the dollar kind of turning a bit here. When I look at a chart of the yen, which I think is mostly just mirroring the treasuries, but when I look at the yen chart, that really looks to me like the yen wants to go higher. Okay, so they came back. Oh no, that's interesting. They come back, but they're not back to 3405. I think I'm going to need to be a little bit more cautious today. Both because yesterday was a losing day. I mean, it ended up only being net -10 in the end, but I'm still very unhappy about that. And my stomach not feeling good again. So, and that might be part of, sometimes when it seems like I'm just losing, there's often, a problem on the physical side with me. So, So Bloomberg reporting applications for U.S. unemployment benefits rose for the first time in 3 weeks, indicative of some more softening in what's still a, quote, strong labor market. Okay, well, here's the zero hedge on the producer price inflation. After yesterday's mixed picture on CPI, all eyes are on producer prices this morning, which are expected to be on... No, that's... You're not going to give me the... Finally, we note that this is positive for margins theoretically, as the CPI-PPI spread is at a record high. Markets are reacting positively to this news. The question is, can the markets hold these gains, or will they unwind them like yesterday? Yeah, exactly. Well, that move right there is okay. And when you look at the treasuries, even though it's pretty flat, there's a gentle little slope coming into it. Oh, you trade the yen? Cool. You're probably like the only one. I'm I'm just kidding. I'm told that like only the government trades the oh, I guess that's not the yen, that's the JGB market, but still. Well, so wait, Tick Herd, where do you live? I mean, like, don't give me your exact address, that would be unwise, but you know, like, which country do you live in? Oh, you live in London? Okay. You know, so I don't know, I guess this is on my mind because I was talking about it with somebody last night, but my mentor John Bottomley, he was an expert in the 30-year treasury, and he did very, very well with it for a very, very long time using volume profile sort of stuff. Now, I think that when you came out of like the 2018 market, like the treasuries kind of shifted behavior a little bit, and probably a lot of his success had to do with it. Just, you know, the bond market was up during that time, right? So he shifted, and what he found success with after that was trading the S&P 500 at the London session open. And I can't remember what the setup was per se, but like there was some studies showing that there was a lot of movement in the stocks when that London session happened, and he was just kind of like riding the momentum of it. That's what he did. Flows definitely shift when the London market closes too, right? Which is a constant frustration for me, because it's like, I want it to move, and like it's not going to move until the London session, and I'm going to have to quit before that, so I can't take advantage of it. Okay, so I'm looking at this. So to review, I looked at this and I said, well, I think that you use sell rates, but I'm worried about this retracing, so I did not take the leap. 3.41 was the place we could have taken. They are now at 3.385, so they are now 25 ticks lower. Now, my takeaway from this, though, is that this is a really volatile market, because the treasury itself didn't move that far. It seems that the interest rates are a little bit more sensitive this morning than they usually are. Your friend trade, yeah. Well, so it was John Bottomley. He died last year. It was really, man, I tell you what. So because he used to talk to me every day, man. Like, I would program stuff, and it was like every day, and it would kind of come in like bursts, but there would be these periods where like we would be yapping on Discord voice chat for hours and hours and hours, trying to like work certain things out, right? And most of the back testing, like more serious back testing that I did, was based on some of his ideas. And then he kind of had disappeared for a little while and that was part of that was because I was way more interested in news at that point. And I hadn't heard from him from a while, and he came back and I was like, oh, I was getting worried from him. He was like, oh, no, like everything's fine. And then there was another period where he went quiet for about 3 months, and then I heard that he had died. So I kind of wonder if when I asked him before if things were not actually going as well as he had said, because it felt really sudden. Why doesn't ZN have a big move on meetings? What are you talking about? I mean, there can be big moves during all sorts of things. I don't know, the ZN. Yeah, he was old. The ZN has just been moving a lot lately. the interest rate volatility really is, it really is a lot, and it's quite dangerous. He didn't sound like he was 80 at all. He had the, I mean, you could tell he was a smoker, right? he was able to quit before he went. And you know what else? He got plenty of fishing in, so I think that he got to sing. So you know, like, what is the sad thing to me is that he left a lot of work behind, you know, and like his family doesn't know what's going on with all that stuff. So I still have this one indicator that I wrote for him that you know, I could put out, that we never put out, that is really quite, oh my gosh, it was very complicated to make. I can't tell you how many times. So like, I would program it up and then he would be like, okay, so like, here's a situation where it didn't do what it was supposed to do. And like the number of edge conditions and like all of the logic that I had to put into that to make it work properly was a lot. It was a lot of work. And I don't necessarily think that there's an edge in it per se, but it does do some things that would be used, because it's a zigzag. It's a zigzag indicator, but it gives you way better, like you can actually use it in a strategy because of the way that it's constructed. It doesn't repaint like the other ones do. And I had spoken to another person. He had been working with them on some things, and yeah, there was a lot of work left behind. It kind of made me think, like, if something happened to me, if I got ran over by a car tomorrow or something like that, there would be there's all sorts of stuff that I'm working on right now that I would hope one of you guys would be able to pick it up, you know? And I don't know if my family would be able to give anything to help you or not. Like if I die, please open the source of my indicators, right? Either somebody pick them up and start selling them for me, or release the source of them. What do you mean by AO? SC London 7 to 10. I don't know if John. Oh, I see. When I die, do me a favor and forget about me. We're not gonna do that. When Uzi dies, we will have an Uzi tribute stream. And So you know what's a thing that I would like to go back and do at some point is, now that we've got like these artificial intelligences that can come in and like transcribe everything that we say on YouTube and stuff, I need to sick an AI on every video that we've made and try and point out like the best points of the stream so that we can make like the best of Uzi video or something, you know? I won't forget you because your name reminds me of a machine gun. Okay, we're at the highs again. I think that the before she goes setup could be interesting here. Let's see. I will put the stop limit there. Yeah, now he's putting up 1,000. I think I can try putting a limit order there. So in this setup, what I would like to see is some absorption at 30.5, just below that high. Want to see some absorption just below that high. Well, okay, so I took the 31 instead. I'm not sure if that's good or not. I tell you what, since that point where I was like, oh, here's the trade and I didn't take it and now it's away from me, right? It sure has been moving very steadily. Okay, so they've now taken 30.5. There was not necessarily an iceberg there. So we're not getting the setup. It could still jump out of here. But there doesn't appear to be that kind of pressure and so forth that can create like the stop run up in here. So for my live account, if I decide that I still want to take a trade here, I probably want to wait for it to come back a little bit. Anyways, I really want to make an AI assistant still. I think I can totally do it. I need another computer, I think. I need a second computer to do it. I guess I need to focus on that. I guess I need to focus on building another machine. One of the big roadblocks for me on doing that is like I want to put everything in the rack, and rack mount cases are expensive. Like that's like an extra $200 or $300, and you want 2 of them. $600. That's like half of the computer's budget right there. Okay, well, I don't think that the book is giving me many hints right now. The volume has definitely been to the long side, and that pressure could well continue, but the book isn't telling me a whole lot about what how likely that may be to continue, and or how far we may come back. I guess I can see from the volume profile there's a 29. And there's an area where we traded quite a bit of volume at 27. Xian puts you to sleep. Teaches, no. It doesn't put you to sleep. It teaches you patience. That's what. Well. Yes, bites both ways before it moves. Oh, now that was interesting. Kind of looks like they're gonna toy with us a little bit, but I find it really hard to see a little boost like that and not think, oh, they're gonna bust the highs, right? The micros down here are being a little finicky about it, though. Which side did that come through on? I think it was the 5-year. I'm gonna clear these downsides just in case. Part of the issue here is we've had a decent amount long. We haven't like dug a ditch yet, but a decent amount long, and no signs of that abating. You know, could we retrace down through this? Yeah, totally. But I'm not seeing any signs of that kind of a flow. I'd just wait for the close and save your money. Well, like, see, look, this the problem that I have here is that like sometimes the trade doesn't make sense if you didn't get into it early enough. See, it worked. Right. So for me to try and sell 3.37 now is kind of a little bit risky, right? Now, I think I need to come back and look at a volume profile now. Okay. So, to throw a little bit of cold water on this, while we did breach like the overnight highs and everything, you've still got all the way up to 08 for yesterday's highs. Okay. Bank of England's pill is speaking. This is a slow freight train roller, isn't it? Okay, now I am starting to see some aberrations in the DOM though. There's one there at 14.25 in the 5-year at 12, which is an interesting price to see a bunch of orders. It is just above the high, but so it does look like there's some of that liquidity rolling out in front of it. You got 05 in the 10-year. Okay, and then there was a large order at 116.00 half that temporarily it looks like it just disappeared. I don't think that it traded. Oh, you're right. I'm sorry. I never switched things back over to here. It's because I didn't want you to see my face. No. Okay. Yeah, there's those like 31 half and 31, right? There's 2000s there. But it doesn't look like the bids are very firm. It's a little too early to tell, but that may have been the meta order finished, right? If there was just that little bit of consistent pressure, if it's gone and they're slumping back down, that may have been the end of the meta order. Coupa and Goldman Sachs Transaction Banking launch a seamless business payments solution. Okay. Hum. So they took out the 31 half. I don't know if it was 2000, but there was 1,000 in there. And there are another 1,000 to get 31. Now, realize that that is just a return to the scene of the crime. Okay, what was that clicking? Spoos. Okay, so something that I'm seeing today that is a little unusual is that I am seeing large orders moving around in the S&P 500 quite early. So it seems like they are making some moves today in the indexes. Man, really? 3.375 is the best I'm going to get? Well, hopefully I have more time. I think that if I'm really going to take this, I would want better than that. The volume did flatten out. Like when we touched that high, probably some stop run there, and then it seems like the meta order backed off. How does that manifest on the dump? Yes, it's just, yeah. So what I'm saying is, you're seeing about 200 contracts like stack and pull and or move around. Now, at those numbers, it is enough that it could just be completely the market maker. But it's not as big of a sign in the E-mini because it happens a lot, you know, whereas when I get those over in the treasuries, I start to pay attention a little bit more. But it hasn't been happening recently. So that says there's more activity today than there has been in the spoos. I don't know if that means that we end up having a breakout day in the E-mini. I don't know. Do you think that we could come back to some of these levels from yesterday? I think that the big level that they'd be looking to try and get back to is 41.45. And this is one of those rare instances where the point of control was not just at the close. Right? So if they were going to take a really extended move to the upside, that's definitely got to be the first target, right? Well, actually, it wouldn't have to be an extended move. We're awfully close to that, aren't we? Okay, so meanwhile, this little bit of upside move is retracing very, very easily. And I am seeing the volume in the 5-year flip. So okay. The 5-year is flipping. I'm gonna cancel that order on my sim trade. I was sitting there thinking hard about, well, do I want to go the other way? I'm too slow, man. Interesting. Okay, Joseph Wing retweeting Joe Weisenthal. That huge drop in Fed measured lending everyone was talking about. It turns out, according to Goldman Sachs, it was just a statistical quirk where he raised my tongue work. Yeah. It turns out, according to Goldman Sachs, it was just a statistical quirk related to the transfer of SVB and SBNY assets. I'm getting old. You should sell a hand-holding course on Jigsaw where you bring your microstructure and how it looks on the DOM. Well, I mean, so first of all, I have the strategy document, right? That's a big one. And I kind of feel like that the hand-holding course is the stream, right? I am getting old though. You know, the problem is I haven't had my I have ulcerative colitis, and the medication that you take for it is $1,000 a month, and I contribute a lot into my HSA so that I can pay for that without it affecting my finances, but the insurance never wants to pay for it. The insurance never wants to pay for it. So I've been without it for the past 2 weeks, and you know, like I was saying earlier, my stomach was a little... I've actually been doing okay so far. I haven't had as much of a problem as I thought I would this session. But the change in my overall energy levels is very noticeable. And I've been trying to like rest a lot. Because I've had times in the past where like I'll be like, it doesn't matter, I'm gonna push through it. And so I'll like do a really heavy workout or something like that, and then I'm just burnt. But yeah, so I think it's most visible in my eyes that they're a little droopy and they're not as open as they usually are. Look into BCP. Okay, I don't know. I've never heard of that before, but I'm really skeptical they would do anything. Oh, it has been used in ulcerative colitis. Okay, but what are the side effects? Okay. By the way, that short volume they were seeing in the 5-year that was flipping things around sputtered out real quick. Like right now, the market is saying, you shouldn't have gotten rid of that order, Seth. Not a legal peptide for bodybuilding and so forth. Oh, it's not legal in the United States. Okay. Reduces pain and inflammation. Side effects. Pain and inflammation at site of injection. Hot flashes, changes in appetite, fatigue, headaches, dizziness. Doesn't sound like that's for me. I know it's frustrating because the medication that I take works so well, but it's $1,000 a month. Like it's retarded, and the insurance puts me through so much to get it. And I don't know what you do to make it so that it's not so expensive. Oh, we're talking about for the ulcerative colitis. You know what I think would be better is if we just figured out what causes it and deal with that. I don't think we really know. I saw a study a couple of months ago that suggested that people with ulcerative colitis and inflammatory bowel disease are substantially more likely to have traces of plastic. That like they were looking at people's stool, and the people with IBS had more plastic in them. Get on Medicaid. Part of it is my insurance. You know, you would think that working for a Medicare insurance exchange sort of a thing, that you would get like the best insurance, but you don't. And the insurance basically is the way that our prescription plan is set up is they don't pay for anything until you've met the deductible, which really sucks for me, right? Because that means I have to pay the full, and they want you to get it 3 months at a time, so that means I have to pay the full $3,000 up front. And I don't know, it's not going, like, I put the order in and it's not going through, so I think it might be doing that because it's having problems with the payment. I may have to switch and put it all on my credit card and then later request my HSA to reimburse it. Right? It's so frustrating. But I am not trying to gain sympathy about my health problems. I'm just trying to say it's definitely affecting me, and it affects your trading, and it affects your energy level. And yeah, you can probably tell. Okay, well, they seem to be developing a range here around, let's say it's around 31.5. I feel like from a price risk perspective that you got a better chance going long micros here. Yeah, and this is a kind of a weird one because normally we would be saying like, okay, so there was like a meta order starting at the news, and then maybe there'd be another move just before the S&P 500 starts. But instead, this one just moved pretty consistently up the whole time from 6:30 to 07, so about 4:30 minutes. So I think that if there's going to be another leg of that thing, that we're going to have to wait a lot longer. Can't even take Tylenol without getting constipated? Or I don't remember what it was the other day, but somebody was saying that you got to be really careful with Tylenol because it like destroys your liver or something if you take it chronically. I don't like taking painkillers. Last time I had serious enough pain to take a painkiller, like I took an ibuprofen or whatever, and then I was like out. I was out. Like I slept for like 6 hours or something, and the whole day was gone. I was like, what happened? So one of the things that we kind of need to be on the lookout for is strong absorption and or other similar shenanigans in the 30-year, which may be related to the auction today. So far, I have not seen any such activity. There was a little bit of interesting things happening on the DOM just after we had that stop run higher. And since that time, most of that liquidity has kind of been washed through. So there's some 2000s at 30 half and 30, and then you got a bunch of big offers. I am too. I don't like the whole thing, especially not the ulcerative colitis. Like, It doesn't seem right. You know, I'm not one of those lazy people that doesn't take care of themselves and blah, 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 right? Like, very active. I don't eat a lot of junk. Why would I have? It's not an issue that anybody in my family's ever had before me. What's causing it? Which is maybe why I'm very much lean towards maybe it is environmental. Like the theory that it has to do with plastic would explain a lot as to why it's been so difficult for them to figure out what the problem is. Because plastic is everywhere. Like, if I decided that that's what it was, or if I had proof that that's what it was, and if I was able to live a plastic-free life, then the issue would go away. How would you go about doing that? Like, everything that you eat is in plastic. Your clothes have plastic in them. I mean, what if it's polyester? What if it's ingesting polyester threads? Like, that is so much effort to get away from. You would have to like create your own town in the middle of nowhere that's completely self-sustainable and doesn't use any plastic in anything in order to get away from that, you know? Don't we eat like a credit card a year? I haven't heard a credit card a year, but there is a lot of plastic in the environment. I do think that at some point in the future that people will look back on how plastics were used and will be horrified. You know, like one of the really big medical issues of the day that aren't really explained is male fertility isn't very high. See, this is where I hate, because when I start getting into this sort of stuff, then I start getting conspiracy theory-ish, right? And I hate the conspiracy theories, but like, how is it that male fertility rates in the Western world and male testosterone rates in the Western world are absolutely crashing, and it's not a bigger deal, right? I can only think of one explanation, and that is that they actually know what it is and they don't want to tell us. It's like they don't want to give it too much attention, because then people would figure out what it is, right? And I think that in this particular case, it's probably a combination of things, but I do think that plastic is one of those things. Yeah, birth control and the water supply could be. I'm a little bit skeptical about that one. That would depend a lot on the water filtration that you have. But there's an old rumor about saltpeter being in the I don't know anything about that. What's that about? It is a common food preservative. Okay, so it sounds like that it is in your food. Oh wait, why did my... Okay. So I continue to see that like the treasury and the micro yields don't seem to be in line with each other in the way that I would anticipate. Like I thought we were at 3.375, not 3.38 at the bottom of this range. The rumor was that it suppresses your sex drive. Well, I think when you have like plastics and other certain chemicals that might be in the water and lifestyle choices, nutrition choices, they probably all combine in a way that decreases male testosterone. Because I think some people will say the government doesn't want strong men, and so they're trying to get rid of them because they're, you know, if you can feminize everybody, they're easier to control, sort of a conspiracy. I think this is probably really complicated as to why male fertility is so bad. You think? Yeah, actually, so you should not have your phone in your pocket all day. So I always put my phone up here on the desk because I don't want it in my pocket. There is, like, your phone, I mean, all machines emit electromagnetic. Okay, so this is see again, I can't talk about this without getting conspiracy theory. Now I have to say something that, like, okay, I didn't tell you this, okay? First of all, there is no evidence that, like, the electromagnetic radiation out there is, like, bad enough that that's what's causing male fertility, okay? But it's not good for you, okay? Having a microprocessor right next to your nuts is not good for you, and they've done studies about that, and that's proven, okay? So don't keep your phone in your pocket if you don't have to. Like, if you're sitting at your desk, put the phone on the table, okay? So let's just assume that was causing a significant problem, that some study came out. This is all theoretical, okay? We want to be very clear. I'm just laying out a theoretical scenario. A study comes out that says that electromagnetic radiation from cell phones, computers, Wi-Fi, etc., is a serious health problem that needs to be addressed. What do you do about it? Well, the first thing that I think you would need to do is you would want to create electromagnetic shielding around many electronic devices. Right? Pretty simple. You need to, like, encase the processor in tinfoil. Right? Why don't we do that already? If having a cell phone in your pocket could potentially increase cancer rates, why don't we already have that electromagnetic shielding on your microprocessors? I'll tell you why. There's a rule that all electromagnetic devices must not have any shielding and must accept any kind of electromagnetic interference. Right? So, like, this whole thing with the CIA used a device to shoot radio waves at a car's computer chip, causing the car to malfunction and crash and kill somebody, and that was one of the things that was leaked. That's real. That's real. And they don't want any of your devices to be shielded so that they can do this stuff. I said it. I said it. Could there be these cases where, like, the government is literally having something that is harmful to us and increases cancer rates, just so that their spy technology can work? Yeah. Straight up. You know, there's a warning sign on every 5G relay tower advertising that the radiation emitted from them exceeds OSHA standards for human exposure. Well, I could certainly see that if you were like right next to it. So has this been empirically proven? Which part? So that's where I was saying this is like a very, so I think that this is kind of an interesting area of study, let's say, because it's kind of like the masks. It's a lot like the masks. I think the masks would be a good example to use on somebody that you heard what I just said, and now you're like, you're all in on the conspiracy that you think that it's like 100% proven true. Okay. We had a lot of data that suggested that mask use reduced the amount of, you know, particulates that get out, and like we had reason to believe that should reduce the spread. And we said, well, yeah, so we've done studies that show that masks don't work, but we have reason to believe that that's not the complete picture, right? So we did the whole mask thing. Now they've been doing studies about it, and the studies still suggest, from what I've seen, and it's a really complicated area that's still under a lot of controversy and argument, but I think that so far the evidence is coming down on the side that the masks didn't really do a whole lot, right? So it's the same thing. Like, we know that these cell phones emit radiation, and we know that the amount of radiation that your cell phone emits is enough that it's really not a good thing to have it next to you all the time, and that it probably could increase cancer rates, but we don't actually have a study showing that cell phone use is correlated with increased cancer rates, right? No. We're saying that the reason it came up was people were talking about possible causes for male infertility and lower testosterone in the Western world, and electromagnetic radiation was one of the theories, right? It'd probably take over a decade. Yeah, I mean, the funny thing that I think you learn when you really get into science is that proving things is hard, right? Proving something about the market is hard. Proving something about your health is really, really hard, because there's so many other factors in something, right? So that's where I'm saying that, like, male infertility probably comes down to a large number of things. It's probably a combination of chemicals in the water, plastics in the environment, bad diet, people not exercising, lots of electromagnetic radiation all over the place. Like, I'm sure that all of these things combine together. Yeah, and the time it takes to prove something as small as killing people earlier than they would otherwise normally die would basically takes generations. Well, look at what was the court case with Monsanto? Yeah. California appeals court late Monday upheld an $86 million verdict that found Bayer responsible for couples cancer after using Bayer's glycophosphate-based Roundup against weeds. Right? And, like, that could potentially be showing up in your food. That could be another cause of male infertility, right? And that's one that we know is bad. And some countries have already banned it, right? And I guess it's owned by Bayer now, is like losing court cases and stuff over it. Right? So you're right. Like by the time you figure it out, the number of people that are affected by it is crazy. Now this is seems to be moving back up again. I'm seeing it's a little bit of volume long in in dimes, but it's a little bit stronger in the 5-year again. I am seeing a slight increase in the steepness of the yield curve, but it's very, very gentle. And this amount up here still has me a little suspicious because that is still within the range. And that's also, the timing seems a little off to me. But it could be a flight to safety from the S&P 500 just absolutely cratering on the open here. So you know what's an interesting example of the thing that you just mentioned there, Uzi, was how long it took them to find out that eating off of pewter utensils, which has lead in it, leads to dementia, right? And so like royal people for generations were going crazy into their old age because of lead ingestion. And how long did that go on for? Right? Like if you were going to go back 200 years and you were going to give the people in the past like one piece of information that would measurably help their lives or help society, I think that explaining how toxic lead is would maybe be one of those pieces of information that you could give them. Right? Because there was that with pewter, and then on top of that, there was leaded gasoline for a long time. Could there be a public health concern where like a company created a public health concern and then kind of hid it for a really, really long time on the same level or degree as leaded gasoline? Could that be happening right now, and could that be affecting my health? Absolutely. Or it could just be a genetic thing and my body wants to attack itself. I don't know. I read a story yesterday on Reddit that there was this guy that was so good at farting that he was the court gesture and was given he was made a lord and was given a huge land property and all of this sort of stuff. And I'm like, hey, I could maybe do that. Okay, so is this a situation where we look for the level break again? There was a large transaction, by the way, 275 contracts here in the micro 10. It looks like it was on the offer. That's curious. That would seem like somebody anxious to get in on the trend, but the market maker willing to fill them that's interesting. Oh, and you know what else we should point out is that the Japanese yen has been moving higher here. Yeah. The move in the Japanese yen has been incredibly consistently higher. I don't know why. Today there was a point at which I thought maybe it's going to reverse. And I've kind of been on the lookout for maybe there'd be a reversal. I don't know why I'm doing that, because it seems like you're getting pretty good long trend, right? I would never understand people who buy and use separate. Wait, what's wrong with Tupperware? Other than, that it has plastic in it. I use glass Tupperware. I don't drink out of plastic bottles. So that's where it's like I'm trying to get plastic out. But like the next thing that I think I would have to do to get plastic out of my life is like completely replace my wardrobe with all cotton. And hope that I'm not allergic to cotton. Because, you know, I'm allergic to everything. Yeah, so what I'm seeing right now is that we did get this kind of spike up. I believe that it is being primarily driven by the Japanese yen. But like it's already kind of dying out. It's I'm not going to say that means for sure that that's the end of it and everything, but it is a little bit unusual the way that it goes. Yeah, non-stick pans. I'm trying to get away from non-stick pans too. That's, I think, a different issue though, right? Probably not causing the problem that we're talking about. Because the problem with Teflon is more that it gets stuck inside and the chemical bonds are so stable that you never get it out. Twitter has been pretty quiet about the time ES drops. Well, the Open didn't look very good, but so far they've actually been able to stabilize. So the treasuries still look pretty active around 01. Well, look, they're falling out here. So, you know what? So here's another thing. If I can completely shift from conspiracy theories to about our health to so yesterday, I think it was it that Warren Buffett was interviewed on CNBC? And he said a couple of weird and interesting things, right? So one of the things was that he got out of all of his banks. That was a little concerning. Another one was that he got out of TSMC, which I'm not quite sure I understand what would prompt him to make that move. And when they asked him about it, he was very avoidant about it. Like he stumbled and what he said and everything. It was really weird. Personally, it's really weird, and it's also some congressmen have been dumping their TSMC as well. Oh, TSMC is Taiwan Semiconductor. Sorry. So it's basically like the largest, most important semiconductor maker in the world. Yeah, and many of the chips. So they make the substrate for many other processors, which is to say that like what you have to do to the silicone wafer to be able to do your processes on it, you need a certain wafer first, and there are some of these wafers that only TSMC can make. So other people might make the actual chip, but they get the substrate from TSMC, and that's kind of what makes them so important. Yeah, so the conspiracy theory would be that the people in charge know something about China and Taiwan that makes them concerned about Taiwan Semiconductor and are dumping stock because of that. I don't know. My take on it would be semiconductor stocks are usually the first ones that get pummeled during like a recession. and it could be that they're expecting a recession. Like all of the sudden, it seems to me like Warren Buffett was like, oh yeah, actually, I think finally now after a year, there are some things that look like the prices are good. I'm going to take a little bit of this, a little bit of this. And then all of a sudden he's going like, no, actually don't like it. So is Warren Buffett all of a sudden expecting a recession? I don't know. What is a long-term investment other than conspiracy theories? Well, I don't know. I'm keeping a close eye on this still. I don't think I can do anything at this point, but what it's kind of looking to me is that like I could have had a good opportunity to have gotten short at 3.38. Not that I was really looking for a short at that time, so I don't think that that's an entry that I would have made, but if I had, maybe I could be up 10 ticks and be looking for it to extend further. But trying to get in here and looking for it to extend further, I'm not sure about that one. There's some thick orders above us though. You have to weigh options. I just the problem that I have with a lot of what I see on the internet is that people are looking for certain bad things to happen that have nothing to back them, right? Which is to say, they're looking for the bad thing to happen because they know that it would be bad, but they don't have any information that suggests that it's probable or is happening, right? Well, they took O2 half. It took about 2,700 contracts. Let's see if they can take O3. If you had 40 billion tied up in TSMC, would you wait around for peer-reviewed studies? Well, okay, so if you had 40 billion tied up in TSMC, okay, and the fear is that China could attack Taiwan, right? So what do we have right now that says that in the next year that China is going to attack Taiwan? I would say that the chances of that happening are extremely low, right? Like I would be willing to put money down on betting that China does not attack Taiwan in the next year, right? And why is that? Well, China doesn't even really have the ability to take the island right now, and it would be very, very bad for them, right? So like all of the information that we do have points to that thing not happening, right? But I mean, it is a bad thing that could happen that would be really bad. The probability is not zero, right? So there are some people that will be all in on that theory, right? Without any kind of supporting evidence at all. I mean, you don't need like a peer-reviewed study, right? But you have to have some edge, right? You have to have some edge to be making calls like that. And most of the time, what I see is people fear-mongering about a host of issues that they don't have any edge on, you know? Yeah. Well, they've been doing that for a long time, Uzi. I wouldn't even necessarily say that was the worst set of military drills that China has done, right? But that's still the chances of them actually doing it in the next year very, very low. Does seem to me like China wants to do it. Will they ever get to the point where they feel like they actually can? That could happen maybe in 10 years. But in 1 year, probably not. Okay, so do you think that Warren Buffett is doing it not because he thinks that it's going to happen in the next year, but because he thinks it's going to happen in the next 5 years? I don't know. So here's another question though. Why didn't he consider that when he originally bought into it? Because it was a problem when he originally bought into it too. You know what I mean? So that doesn't make sense. Why is it all of a sudden now? He would have to have a new piece of information to say that now all of a sudden this is a big enough risk that I don't want to be in it anymore. Maybe he feels the possibility is greater now. So you just wake up one day and all of a sudden it's more of a concern to you? That doesn't... I don't think that an investor like Warren Buffett works that way, right? I think that he would have to have information that changed the story for him, right? And that's just the thing, is that we're not aware of any information out there related to TSMC that would suggest that sort of a thing, that like Taiwan is under an imminent risk of an attack or something like that. But we do have some pieces of information that suggests we could be moving into a recession later this year, right? So under those scenarios, the scenario where Warren Buffett is preparing for a recession seems a lot more likely. But we don't really know, because he was kind of avoidant about why he did that. And that's where it gets weird, right? That's where it gets weird. Is that he didn't really have a good answer as to why he didn't want to be in that. Yeah, exactly. I would think that, and actually I don't agree with that. I think that's actually wrong. No, I think that Warren Buffett would be sitting there and saying, well, I got out of it because I think there's going to be a recession. Oh no, I can't say on CNBC that I think there's going to be a recession. Can you imagine all of the headlines? Warren Buffett preparing for a recession, etc. Like stocks would sell off just on him saying that, right? So that could maybe be why he was weird about it. It's because he didn't want to say anything that could suggest that we were going into a recession. Maybe. But like, that's the thing. If that was true, like that's just as significant of a conspiracy to me. Should I call it a conspiracy? I don't know. But like, what is it that Warren Buffett knows that suggests so strongly that we're moving into a recession? Because I'm seeing a lot of data that kind of suggests that could be happening. The Federal Reserve staff, in the meeting minutes that we got yesterday, they basically were projecting a recession in the second half of the year, right? But that doesn't seem like what the market is pricing right now, right? So that's where it gets interesting. What does he know that the rest of the market doesn't? Or is it he knows the same things that we do and he's just taking it more seriously and the market is being stupid? I guess that's probably the most likely scenario. It's just like, with political candidates. So if I can backtrack a little bit, you know, like you will often see when you get into the primaries, there will be people that attach themselves to candidates that aren't very popular, right? Like there's the diehard fans of the guy that's like in fourth place, like the Ron Paul fanatics. Great example, right? And you would see Ron Paul fanatics betting that he was going to win the nomination, saying that he was going to win the nomination, etc., etc. What information did you have that said that Ron Paul was going to win the nomination? Absolutely none. Why are you saying that? Because you want it to happen, or because that's the scenario that you've built up in your mind, right? That's so sometimes you might predict that the guy that you want to win isn't going to win. And why are you doing that? Is it because you know enough to know that the probability of him losing is high? Or is it because that's just the thing that you're most worried about, right? In other words, do we have real edge, or are we falling victim to our human biases, right? And more often than not, it's the latter. The Fed was saying inflation is transitory. Now they say mild reset. Yeah, that was a little weird to me. I mean, I think the thing is that if the economy were to go into a recession, under the current trajectory, if you just kind of, how do you say this? If you take the models and you take current trends and everything, then it's going to suggest, oh yeah, you're going to go into a recession. It'll be a pretty mild recession. It'll be very easy for the Federal Reserve to reduce interest rates a little bit or whatever the deal is, and come and bounce right back out of it. And it doesn't have to be a huge deal. And the actual decline in unemployment wouldn't be all that much, right? But I think the thing that analysis misses is that the possibility that something else breaks in the next 6 to 9 months is, I think, higher than usual, right? And who knows what would break in a recession. And I think that it could very easily turn into a very deep recession, especially if you continue to get inflationary forces, right? So because then you get into this situation where the Federal Reserve needs to put money into the economy in order to get out of a recession and spur growth, but they can't really do a whole lot because it'll just create inflation. In other words, the exact opposite situation that we've been experiencing for the last 10 years. I think that the Federal Reserve's analysis of that discounts that scenario too much. It doesn't consider that scenario enough. Nah, the entirety of capital markets is a byproduct of human biases. I don't completely agree with that. It's not that human biases don't play a major factor in it, but a lot of people want to say that that's all the market is, and that's not true. So to say the entirety of capital markets is not. Without humans and their biases, there's no, it's not true at all. It's not true at all. So this is a key point in our understanding of markets that is key to understand, is that if everything was robots, right, there would still be a volatility, right? No, if all transactions in the market were carried out by robots, okay, and those robots were all programmed well to like not have the human biases in there, and so all of the decisions that the robots were making were logical decisions, there would still be volatility and there would still be market failures. And it's not because of the flaw. So how much further do I have to take it? If the entirety of the market was robots and those robots were programmed by God, there would still be volatility and crashes. Right? Because what causes those things to happen is the structure of the market that we use and the rules that we use, and not necessarily the biases of the participants. Not that the participants don't have their biases and so forth, but even if everybody was doing everything correctly, volatility and endogenous crashes would still happen because it's in the very nature of the system that we're using. Right? If no one, well, but that's not true, because some people have to participate in the market, right? Not every decision that's made in the stock market is a speculation, right? In fact, a lot of it is very mechanical. People want to, with the way that this system is set up with taxes and everything else, the thing that makes sense is to put as much money as you can into an index fund. Right? So there's buying and selling that happens that's right, that I would say is not connected at all to any kind of, biases. Right? And the key thing is that those are the strongest forces are not, right? So some of those strongest forces end up being, for all intents and purposes, random. It's important to understand that, because the point is that we vastly overestimate the impact that the human biases actually have on the market. That the trying to predict what human biases are and all of that sort of a thing is not necessarily the best opportunity out there. I could also approach it the other direction. So if that was really true, or rather, we did live in a market where all transactions were driven by human behavior and biases and so forth, then I think that things like patterns and technical analysis and so forth would work really well. Right? If it was purely about, I think that the kind of like the ideas underpinning technical analysis and stuff, that like people tend to behave in a certain way and yada 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 yada, and they don't change over time, so these patterns should be persistent and so, right. If I think those are all like solid ideas. It's just the problem is that the market is not primarily driven by people's emotions the way that we think it is. Emotions are a major factor, and sometimes it matters more than others, but some of the strongest forces that we have are purely mechanical and seemingly random. No one has to keep their money anywhere. Well, okay, but like you're kind of being stupid if you're not getting your employer 401k match, right? People aren't dumping all of their retirement into 401ks because of their emotions. They're doing it because it's the only thing that makes sense. It's the only logical action to take. So I tell you what, that move that we had there was a little interesting. I could see somebody calling it a liquidity grab, but it wasn't really like that, was it? It was like a couple of guys traded it and then it sputtered out real quickly. What data feed are you using? I'm using Rhythmic. I need to talk to, I should ask Jigsaw about that, because my NinjaTrader 8 my license does not work with that setup. I can't use Rhythmic with my full NinjaTrader license. I'm using a demo license, and that demo license doesn't work after NinjaTrader 8.1. So I need to ask them. They might not be willing to change the license, but maybe I can get kinetic data or something like that, so that I can continue testing things with the latest version of NinjaTrader. Well, so now that we're back to 3.38, I kind of feel like I could take it either way. No, I'm not with NinjaTrader brokerage. I'm with EdgeClear. I was with NinjaTrader brokerage and I didn't like it. No, I don't think you understand. You can set up Ninja with a bridge, yes, but Ninja can't connect to my data feed. I have a multi-broker license, but it won't let me connect to Rhythmic. Well, why did I not like it? So number one, in order to trade through them, I had to use the bridge, which means that if something goes wrong with NinjaTrader and I have to restart it, which is not super common, but happens at least once a quarter, right? I don't want my Jigsaw to be hosted and not be getting any data while that's happening. So that's the first problem. The second problem was that using continuum data, I don't get as many levels. And so it was not as quality of a data feed for what I was doing. And then on top of that, there was a couple of key points where they had technical issues that were 100% their fault, and their service was not very responsive. So I moved over to EdgeClear and I haven't had a single problem. Well, the treasuries are declining here. It seems to be in line with the Japanese yen again. There was a shift in the dollar there. So that seems, the dollar seems to be a key driver once again today. As expensive as Kinetic is, they only give you 10 levels? Really? Well, I'm going to shoot them an email today and tell them because when I did this before, like I tried setting it up and like it didn't work. And they're like, well, too bad. We don't give that kind of multi-broker license away anymore. You'd have to be grandfathered into the old multi-broker license, and I'm not. So it was just kind of like, oh, well. So like now what I need to do is go back to them and because I think that they'll provide Kinetic for you. So I need to just do, okay, well, I'll just use Kinetic data then. And I'll connect NinjaTrader to Kinetic, and I'll connect Jigsaw to my Rhythmic. And yeah, I know, we'll see. We'll see. I think the main reason I'm thinking about it is because if I got the kinetic data, I could do that backtest thing, right? So I would like to be able to maybe record that next weekend and put it out. Joey Short Squeeze just pointing out that hedge funds are 4-1 net short ZNF. Well, if I had taken the long side at 338, I'd have 5 on my side. It does seem like it's breaking down further. The problem on this one is the downside is probably, like, you can see the liquidity there at 27, for instance. How much, if there is downside, how much downside could there be? I mean, I think I would need to have a relatively strong meta order short, and what's gonna drive that? And meanwhile, the amount that we've moved here could just be in line with the regular amount of volatility here, and they could go back up to the highs very easily. I don't think that's what's going to happen. I think that they're going to continue falling down, but the chances of them going back up to the highs is high enough that I'm weary about taking it. I really want to trade it, though. I don't know if that me really wanting to trade it, though, has anything to do with whether or not I have an edge, right? I'm just itching to take a trade. It's a little late in the day for a trade too, don't you think? So let's come back to zero hedge here. See if there's any more fundamentals based analysis. Joe Rogan issues a warning after AI generated version of his podcast surfaces. Yeah, this machine learning stuff is going to get silly. Once in a millennia rain event swamp South Florida, you haven't been having any problems, have you, Izzy? Oh, hey, you can get a free 2-week trial of Spot Gamma. So if you have interest in that, you're trading SPOOs, that would be something I would encourage you to look into. No, it doesn't look like there's any new stuff beyond the... Oh, here it is, continuing claims. After last week's dramatic adjustment to the last year's worth of jobless claims data, the picture is a little more grave than the pre-revision data has proclaimed. Initial claims were expected to rise 228, but were 235 in the latest week, but actually printed worse at 239. Continuing claims dropped very modestly last week. One look at the new initial claims data shows the last 2 months have basically been non-stop increase in initial claims. California dominated all states with the largest jump in jobless claims, while Ohio saw initial claims decline. So that would suggest that it's coming from tech. As we noted earlier, the pervasive deterioration in continuing claims data across U.S. states is consistent with a recession beginning very soon. Another thing that's kind of holding me back here, maybe it shouldn't, but the 30-year is selling a lot more hard, let's say. So it looks like there's still like this steepener trade being put on, and when I'm seeing a steepener, I'm thinking we're more likely to move up. So when I see this downside movement, there's kind of some reasons to think that it's more of a pullback rather than a really strong meta order that's going to push us all the way back the other way. For some reason though, today I am kind of like feeling and looking out for that large meta order. I don't think that that's what we just saw. But we did come back quite a bit from the high. What do you think by SPY 4200? I think that right now I am partial to there's going to be a recession in the second half of the year theory. And I think that the S&P 500 at the moment, that because sentiment is so bad, that you're more likely to see these really quick moves to the upside on short squeezes. This is probably what's happening right now. They haven't quite touched 41.45, but that was kind of the price we'd been looking for. So could they get to 4,200? For sure, because that's only 50 points away. But in the larger scheme of things, I'm more concerned about the possible downside. Like if I was managing a fund, I wouldn't be putting more money in right now. I'd be kind of like protecting myself and using these up movements to sell some things and raise cash. And Oh, really? If you discovered you were a victim of fraud in 2022 and you itemize your deductions, you may be able to deduct your fraud losses on your personal income tax return. I did not know that. Okay, so there was a little bit of a pullback there, and it's like undead again. Oh, I don't like this. I don't like this action because the market is just moving too much based on what I'm seeing. Not my favorite. Not my favorite. Is technical analysis considered fraud? I wish that technical analysis itself was considered fraud, but you could be sold a technical analysis program that could be considered fraud. Yeah. Oh, look, they came back down and there's a big offer on it. So again, when I see a big order like that, I'm instantly suspicious. Why would you want to put 3,000 at 28? I mean, if you really wanted to fill, you would have kept it on there. Doesn't look like that's how much is actually going to trade. So then it's like, you're trying to move it, right? That kind of ends up being really fishy and often results in reversals. I suppose that might make cents for a long here. I'll do it on sim. No, I already have one contract on there. I don't want to add to it. I mean, I could take 339 short. That is a little tempting, actually. So that's a lot of short volume in the 30-year. So I can, if I really end up taking that, Another thing is it's better to try and catch it in a spot where you can like catch the edge. There was one right there. S&P's doing something. I don't know. It's awfully big bids down there, and it's just like super quiet. Full liquidity here in the micros. Okay. We're gonna give that a B. Wonder one thing that we have to remember again is there is a 30-year auction, right? Okay, it looks like they're gonna trade 27. Should have waited. Sure are rolling the volume out in front of them though, because look, the 26.5 is now stacking. Ooh, 2,400. Oh wow, that moved it. Well, shoot. Damn it. Well, I didn't have to wait very long to play that one. In fact, I should maybe consider flipping around. I will, in fact. of course. Starting to get some hints of this coming into the 5-year and the flattener. No. Iceberging 27 offer. Clears it. No, it doesn't hold. Not seeing the market sell orders, but still iceberging. I can see that flattener. Is buying back 30. Well, not helpful. Okay, so we get natural gas down at the bottom of the hour. That's usually not a big deal, but just to keep in mind. There's the 5-year ticks down again. The liquidity they had at 27 is pulled. Okay. What about 26? I don't think that one will pull. But they could trade through that. Aha! Did pull. And they cleared it. It didn't hold, but they did clear it. 887, huh? $17.94. Good offer. Nobody hitting 26 though. There you go. But look at the flattener. The 5-year is definitely dragging it down. And now all of a sudden it's like the micro yields are barely responding. What a crock of shit, man. Because that other one, it was only 2 ticks. It was only 2 ticks and they moved 10 ticks over here in the micros. But over here, we just fell 3 and it hasn't budged. I think I've gotten too focused on it. I Nathan Tankus, I rebut the Brookings Institute senior fellow Aaron Klein's op-ed in the Wall Street Journal, attacking the idea of full deposit insurance on the basis that FDR rejected full deposit insurance. The problem with this is that he rejected partial deposit insurance too. Oh, okay. Well, darn. I mean, there's been some selling here in the treasuries. It's been well, okay, that was interesting. When they took the 26 that time, it was quite an aggressive sell. So about 1,000 contracts sold, about 2,000 contracts went on the offer, but then that almost immediately pulled and they ticked back up. Okay, goes offer again. Still not seeing the Japanese yen move nor the dollar. The dollar has kind of gone quiet since the top of the hour. So there was a couple of ticks down there that seemed significant, but then they didn't keep pushing at 26. Those bids are awfully flighty, though. Wow. Yeah, 5 years, still down 2 ticks. S&P is looks like they could make it to 4150. Kind of looks like it wants it. You can see over there they kind of jump on that a bit. Okay. Can we get more takers this time? There you go. Kind of forgot that I had a position on here up in the main one. I guess on this sim trade, I don't know. Should probably bail. I'm wondering back on my entry because I said I'm gonna give it a B. Okay, that's finally coming back to break even. That must mean that the price that I was getting wasn't very good, right? If I had like broker tech data, might have been able to look at what was on broker tech and had seen that it wasn't a good price. But again here, we just came through a little bit of an area. There's 3-4 ticks. The micro yields aren't rising that much. The 30 years starting to come along with it. Oh no, I take that back. That like the 30 year is really coming along with it. I should note 22 below us. It's kind of a benchmark area where there was a pullback after the initial news and a market maker position. I wouldn't be placing any bets on, you know, it goes there, it reverses there, or continues or whatever, but it's a benchmark. Once we start to get past that area, then we're into the, okay, we've completely erasing the gains from the news. Like we did yesterday, essentially. Now, interestingly enough here, you know, I would say this is a decent amount of selling, but the actual change in cumulative delta is not there. Hasn't changed very much in cumulative delta. It's kind of interesting with the treasuries. You know, this reminds me a lot of the old times. Wouldn't you guys say? Like, it seems really slow at points. It's like there's hardly any volume coming through, and then you know, it moves. And actually there's a lot of volume and activity, but it's like really sporadic. Like there's big pauses in between the main orders, and you have to be really patient with it. And there still seems to be some fight in this tape too. They're over here. They're like, no, we can't go short. That would make Seth money. So we have to fight it here. Okay. I still detect the hint of heaviness, but they're going back and forth here a lot. And along with that, it does seem that the dollar is kind of like slowly rising. We'll see if the Japanese yen starts moving and helping our position out here, but I continue to get like tick after tick, and it's not really moving, which is very frustrating for me. And let's see here. Forgot about the E-mini. The E-mini still kind of seems like it wants to go for 41.50, but it's been struggling there and kind of going sideways for quite some time. That's some really big tails there in the S&P, right? It's got some hairy feet there. Okay. 5 years seems to be trying to continue to drag it. Didn't I clear the downsides here on this? Oh, I did. It's down to 057. I don't know. I guess I'll clear it. You know, so when you get a move similar to the one that we had immediately following the news for about 30 minutes to the upside, we call those a freight train, because when you're watching the DOM, it can often be deceptive. It seems like the bids are being really stubborn, and that like any second now, the sellers are going to become exhausted and it's going to reverse back up, right? And then it just never happens. It just keeps very, very slowly going one direction. And we did that for about 30 minutes to the upside. The thing that's weird is it did that for about 30 minutes to the upside, and now it's been doing that for about an hour to the downside. So to have freight trains both directions, that's not something I ever remember seeing. I'm sure it's happened before, but that's not something I can ever remember happening. The freight trains haven't been as common over the last 2 years. You know, that was kind of a pre-pandemic sort of a thing. And now that the liquidity is recovered, maybe now it's coming back. This is a really interesting change in the market that we might need to consider, is that some of these meta orders are just kind of being like spread out more. And that could be because the liquidity might make executing it in a slightly different way more effective. So here you can see it 1725, which is low for ZN. Like there's some absorption. There's 1796 on there. If they want to, they'll probably clear it still though. If the freight train's still going, it'll just keep going. Nah, well, it's a tick up. Another thing is, even though this has been a freight train, there has been a bit of fight in it, hasn't there? Like, I'm not seeing the cumulative delta come in short into the 10-year in a strong way, for instance. In fact, I'm only seeing that happen in the 30-year. And in the beginning, it was a flattener, but now the 30-year has caught up. What's going on here in the E-mini? There's a big bid at 41.39 and some absorption at 41.40. Some more selling coming in there into the 10-year. Just kind of an okay downtick. 30, the 30-year looks a little heavier than the others on that one. So like you can see here, the dimes have come back 2 ticks, but the 30-year is still pushing low. So it's steepening again. It's pretty thick on both sides in the 30-year though. Normally at this time of day, so does the micro 5-year just never tick? It seems some days it seems like, yeah, it never does. Some days it just doesn't. And honestly, I'm kind of surprised. Like, it seems to me like how it plays out is, you want to play in the 10-year because that's where most of the activity is. You can come over here in the 2-year because that one at current times is more volatile. Like you get this interesting thing where when you're looking at it from micros, the 30 years are really volatile and the 2 years are really volatile. So then you could come in here and you could say, well, I want to get exposure to the short end of the curve, but I don't want it to be as volatile as the 2-year. Then it would make sense to trade the 5-year. But apparently nobody feels that way because you just don't see a whole lot of activity in the 5-year. And even now, many months later, I mean, do you remember those streams where we were kind of able to spur some activity in it a little bit? You know, so it's not like it couldn't happen with a concerted effort, but it's just not. And so, yeah, my instrument never centers itself correctly because there's no trade has ever gone through for it to recenter itself. Okay, well, after all of that, we got a little bit more downside, and we get to start testing some of these big bids down here at 24 and 22.5. I don't know. I think we're going to end the stream before any of that happens, and I may just take a small cancel out my earlier loser. I don't think anyone of consequence is trading micros. It seems like a retail charity product. I guess you could look at it that way. I don't think that the CME really looks at it as charity. I think that the CME looks at them as useful business products, which is to say that like the CME does make money from it, and the CME does feel that that bringing more retail traders in there to trade it is better for the exchange in the long run. But it's like there's nobody important using it to do certain things, right? That's probably true. But I just don't like the word charity, because the word charity kind of suggests, well, it's a burden for them to do this, and how much longer will it be before they give up on it? Because it's not. I don't think it's like that. I think that it's serving its purpose, and that they're probably going to keep doing it for many, many years. That's them. Since them throwing well, it's 100% intended to attract retail. Yes, 100% attracted to attract retail. I don't think that many businesses are finding it useful. No, probably not. I mean, there's the possibility of that in the future. Yeah. Market make them up and read the, yeah. I mean, I think that there could be a situation where, you know, if the spreads were better, that like spread trading on longer time periods could make sense to another class of trader. Right? That's I'm still holding on to the dream, right? Where like actively spread trading this is a common thing. And there's lots of retail traders doing it. You know, retail traders that they don't have enough to be trading options, but they still want to do something sophisticated, and they're trading the yield curve. I'd like to see that. It's like retail DOMs. They didn't make this because it makes retail traders better. They made it because it makes them trade more. Yeah, that's might be true. Nah, I mean, if that was the case, I would think that applications like Robinhood and stuff would put more effort into putting DOMs in there, right? It does make traders trade more, but I think that the thing that drove it was the retail traders that demanded it, right? Many to their detriment, right? Robinhood is convenience and mobility. I haven't really seen a stock trading platform that I really felt was effectively geared towards short-term trading, you know? I really hate Robinhood. From day one, I was kind of like, I don't know about this one. Giving them your order flow, I don't think that's very smart. Well, these downticks are just starting to get more and more consistent, man. I don't have R squared on that chart, but I'm sure that if I put R squared up on that thing, it'd be like 95, 98. I log into the client portal and it has, oh, you're talking about Ninja Trader. Yeah, 100% they're doing that. I don't like it. I don't like it. I'm not a fan. That's probably good for me. Like honestly, if Ninja Trader became as popular of an app in some situation as Robinhood, who is better positioned to take advantage of it than myself? But I really don't like the gamification of trading. You know, I guess that's because at its heart, I don't believe that most people should do it. I think that it's a necessary job, and that you're kind of sacrificing a lot to do it. And there can be a reward in it, but most people don't get that, right? So I don't think that most people should be picking that up and like basing their life on it. I think the only people that should be doing that are the people that are just magnetically attracted to it, or want to be involved in the market regardless of what happens to them, you know? Those are the people that should trade, because we do need them. We do need them. The thing that I hate is that it seems to me like a lot of the people that are like that, they don't find the information that they need. They just get taken advantage of and they wash out very quickly, you know? Steamrollers need roads. Why do I do it? Because I love the market, man. I love the market. I would do this even if there was no way for me to make money from it. Like if something crazy happened and for some reason they like banned us all from trading, I would still pull the thing up and sim trade it. I would. That doesn't stop him from getting mega sad when he loses, though. How depressed do you think I was when I was losing yesterday? I kind of, because I felt like I was just kind of okay down, and that maybe it was a little bit lethargic just because, you know, again, inflammation and all that sort of stuff. But then the thing was, is I held it. It went quite a ways against me, and then the auction came along. It started moving my way, and then the auction came, and then I took it off almost immediately off of the auction and erased the losses. And after I did that, I was like, you know, I don't know if that trade was very smart. You know, I don't know if that trade was very smart. So I in the end, I was like, no, I was way more attached to trading that than I thought. And I do get mega sad, but what makes me sad isn't the money, it's the I'm not doing well, right? Like I can be just as devastated when it's sim. You'd be less attached if you didn't know. I don't know if that's true. Dude, I tell you what, so I can remember really, really early on. So when I started doing this, because I only started doing this after I had started working for the company that I work for now, for the insurance exchange. And I remember some of those, that early trading that I was doing where I was trading on sim, or maybe it was a combine, and like blowing out like 3 times in a day sort of a thing. Like I would take a trade, right? And then it was a really bad trade and I lost $1,000 on it. And I was like, this really sucks. Let's start over, because I feel like I know I learned my lesson now, and I'm going to try and trading it from here. And then I lost another 1,000, and I did that like 4 or 5 times. And I'm like, holy crap, like what the heck, right? And that was some of the early stuff in 2016. And I was so tilted by it. And once I had gotten into that mode, it seemed like everything that I did was not just like a bad, like I can get in a situation where it loses every time, right? But it was just like my decision making was so bad, and I wasn't really very aware of it back then either. But I had no way to climb back out of it, right? And I think that the stream helps me on that front, not hurts, actually. And I think that the main reason why is that to even be in front of people like this, you kind of have to just let go of the ego, right? Like the instant that you push play you're kind of making a decision, and you're trading live. You're making a decision that at some point I'm going to do something stupid and people will see it. And you know that that's going to happen when you click that button, right? So you have to just leave it behind you. And that, I think, helps a lot. That's why I keep saying, like, the thing that kills your trading the most from a mental perspective is the ego, in my opinion. And that, you know, trying to double down on a trade or whatever it is that you do because you don't want to look bad. You know, denying how effective your strategy actually is because you don't want to look bad in front of other people, that will hold you back more than anything, right? Like, imagine if, especially some of these early times, like 2017, when we first started the stream and I had a really, really bad summer. So the time period just before COVID, for instance, was another period where I did bad. And imagine if I had tried to pretend that, you know, I wasn't doing poorly. I had tried to put on a face and tried to fake it, or I'd lied to you people, right? I would not have made the breakthroughs that I did, because I was only able to make the breakthroughs by being honest about what was going on and receiving help from you guys in chat. So I do get mega sad when I take a loss and everything, but I'm just saying I would probably be worse if I was all on my own. And that's more just a problem with me and my neurotype that I kind of just have to deal with. And on that one, what I think I've kind of been able to do over the last year or two is kind of get into the mode of happens, and I just know where to stop and not make it a disaster and move past it. I just eat that shit and deposit more money. Well, yeah, you know, that's another thing. Now that we have the micros, like the thing was before, I would be live trading and then something wouldn't go well and I would be like, okay, like we have to completely pull back. We're just going to only trade sim for a month and we're constantly building up from square one and everything. And then that kind of didn't work very well either, did it? Being able to be taking on so little risk that if I did do something incredibly stupid and just totally blew the account today, I could completely refund it the next day. No problem. Right? That helps a lot. Because you have to like keep yourself in the cycle. Or should I say like the market cycle, right? Because if you take yourself out of it, starting from square, I didn't realize it was 905. When you take yourself out of it, it kind of I think it hampers your progress, because then you don't go through the experience of having to pull yourself out of the drawdown, right? But once you've pulled yourself out of the drawdown, you start to learn that like it's just a natural part of what goes on. Okay, I gotta get going. I will see you guys tomorrow, Friday. Retail sales should be really, really interesting, so don't miss it. I will see you guys then. In the meantime, stay excellent, team.